going, guys? I'm Danny LeBeau. Welcome back to the Fourth Revolution. Talk about stocks for your portfolio of the future. So the last month and a half or so, I've had a lot of valuation compression on these high growth names. It's opening up opportunities specifically in fintech. I'm really focusing on fintech these days with huge potential over the next 5 years. The sector is expected to see 25% compounded annual growth, and the right picks in the sector are seeing even larger upside potentials moving forward here. I got a pick for you that I actually pitched about a year ago, almost a year ago today when it went public. Upstart, the company that is changing the way banks evaluate credit worthiness. And it's driven by AI, and it uses 1,600 different components in order to evaluate a consumer's credit or a business's credit. And they say it's 5 times better than the most sophisticated systems that banks use today. And this is a real niche opportunity. So I was pitching this thing back in last December. It went public around $20 a share and shot up to $400, 1,800% return. And today it has come down to a level that I am comfortable again buying at. We have fallen from the stars of that $400 price down below $200 a share. We have a couple key support levels that I'm focused on that are holding the stock up in the face of this interest rate driven valuation compression for these growth names. So let's take a look at the charts, take a look at the opportunity here.
This is Upstart on tradingview.com, ticker UPST, and you can see this thing IPO'd at about $20 a share, which was an unbelievable steal. And if you're able to get it in my last video, congratulations. I would stay holding here and maybe even add to your position. But this thing is coming down, like I said, to a level that I'm comfortable with. We just bounced off this key Fibonacci level right around 160, and this is a fib drawn from this June high down to our lows in July, and it's proven to be a bottom, it looks like, for the markets, and now we're being held up by this 200-day moving average. And this is a day when investors are pulling back a lot of their high growth to shore up capital into the CPI report, which is so uncertain. It has massive implications on the Fed's interest rate policy moving forward here, which is going to be something that impacts these interest rate sensitive growth companies. Luckily, Upstart is already profitable, so it's a profitable growth story that really just can't be ignored, no matter what is happening with rates. And it's lock and key with or lockstep with the banking sector is actually a positive for this company, because as interest rates rise, so do banking profits as their margins expand. And Upstart is going to be a part of that upside growth moving into this fourth industrial revolution. Like I said, we have dual supports here, one at 160 and one at about 180, which is where the 200-day moving average is at. And I'm looking at price targets around $300 a share and above. And I think that this thing is poised to take off with the banking sector as it continues to work with them. So a lot of these fintech companies are working against the banks as competitors, and Upstart is in a unique position to actually be an asset to these businesses and allow them to compete in this next generation of digital finance in the fintech sector.
Remember, guys, that this Upstart pick is going to be volatile, so you've got to stomach some short-term volatility in order to position yourself well for this next decade of returns. And Upstart, like I said, is positioned perfectly today, and I think that we have enough support under us today in order to justify this buy, even with interest rates being at a really capricious time, with the CPI report coming out tomorrow that's expected to be the largest it's been since the Volcker era over 3 decades ago, back in the 80s when inflation was out of control. It's close to 7% annualized inflation coming out of November's CPI report. So I see a lot of potential here in Upstart, and its profitable growth profile makes it very attractive at these current valuations. So don't forget to check out Zacks.com/promo to get our latest promotion, and I'll look forward to seeing you guys next time.